Hello, my name is Kayla Weaver and I'm a CPA at Arndt & Company CPAs. In this video, I'm going to go over the loan forgiveness aspect of the Paycheck Protection Program. So if you receive some funds under this program, this video could be a great way for you to learn some of the basics of the loan forgiveness as well as see some example calculations, learn how to record it in QuickBooks, and then what we think will be needed for proving the loan forgiveness amount to your lender. So first, let's go over the basics of the Paycheck Protection Program, or PPP as I'll refer to it, loan forgiveness. First, we need to know what the coverage period is. That's been defined as the 8-week period that will start on the day that your PPP funds are deposited into your bank account. So once you get those funds, that's day one, you'll want to calculate what 8 weeks out is, and that'll be the coverage period that we're looking at. Forgiveness is based on your actual qualified costs that you have incurred and paid during that coverage period. Now there's still some uncertainty as to what exactly incurred and paid means, but for now we're going to go under the assumption that if during those 8 weeks you have those qualified costs that are paid, that you're going to be good to go. That can be part of your forgiveness. If we learn otherwise, we will let you guys know. So those qualified costs can be payroll costs, which include your salaries, wages, commissions, tips, employee benefits, which can be like health insurance, as well as state and local taxes on compensation, which would be like your state unemployment taxes you pay as an employer. You also could have mortgage interest as long as the obligation was incurred before February 15th. It can include rent as long as you have a lease agreement that was enforced before February 15th, and it can include utilities such as water, electricity, gas, telephone, and internet as long as that service had began before February 15th. Now the loan forgiveness can be potentially reduced if your full-time equivalent employees count goes down, if your wages decrease by more than 25% for any employee that's making under $100,000 a year, or if more than 25% of the loan forgiveness is used for non-payroll costs. So that would be those mortgage interest, rent, and utility payments. And we'll do a couple calculation examples here in a minute on some of those. Now, any amount that does not get forgiven, you can either repay immediately with no payment fees, or you can keep it as a loan with those original terms of 1% interest due in 2 years. So first, let's do a quick example of when the PPP loan is fully forgiven. So we're going to assume that our loan proceeds were $50,000 and deposited into our bank account on April 20th. So first, we want to calculate that 8-week coverage period to know our qualified costs that will fall in that range. So that would be April 20th to June 15th. And we know after June 15th, we look back and see that we had 4 payroll runs totaling $45,000, 2 rent payments totaling $5,000, and 2 utility payments totaling $2,000. We also know that we've at least kept 100% of the full-time equivalent employees and all of their normal wages, so we won't have to reduce it based on those 2 things. So looking at the above qualified expenses, we can see we have $52,000 in total. Our loan was $50,000, so that'll be our max forgiveness. We can do a calculation to make sure that at least 75% was used on payroll. We can see that 90% of it was, with our $45,000 of payroll divided by the $50,000 of loan proceeds. So we know that all $50,000 could potentially then be forgiven. Now let's look at an example where the loan forgiveness amount is reduced because we didn't maintain the same amount of full-time equivalent employees. So we're still going to use the same information as before with the PPP loan of $50,000 and the same qualified expenses. But now we're going to see that our full-time equivalent employees, before all of this, we actually have 2 options, which we'll look at in a second, was 10, whereas now for this 8-week coverage period, our full-time equivalent employees equals 9. So it dropped. How did we compute the 10? They say you can use one of 2 time periods. So the first one you can look at is your average full-time equivalent employees between February 15th of 2019 and June 20th of 2019. So in this example, I'm going to say that was 11. And then you can compare that to your average full-time equivalent employees between January 1st of 2020 and February 29th of 2020, which is 10 in this example. You'll want to use the lower of the two, since that is your denominator in this equation and it affects the forgiveness computation. So we're going to use 10 here, like I said. We've got 9 as the coverage period, so that gives us 90%, 9 divided by 10 there. That 90% means that our loan eligible forgiveness will only be 90% of the loan proceeds of $50,000. So the 90% of 50 is $45,000. Now we have enough qualified expenses to cover all of that. From above, we got $52,000 of qualified expenses. Of course, that's maxed at our loan eligible for forgiveness, which was that $45,000. We do our computation to make sure at least 75% was for payroll. Our payroll was actually also $45,000, so 100% of our loan forgiveness would come from the payroll. And so we've got $45,000 that will be forgiven, and then $5,000 remaining on the loan that we can either go ahead and repay right now or wait to pay sometime in the next 2 years. Now let's do an example where it's only partially forgiven because we simply don't have enough qualified expenses. So same as before where we had PPP loan proceeds of $50,000, except this time our qualified expenses were a little bit less. Now we are looking at 4 payroll runs totaling $40,000 and the same for rent and utilities. Again, this time we will assume we have the full-time equivalent employees at 100%, so no reduction there, and all kept at their normal wages, so no reduction there. We have $47,000 of qualified expenses. We look at our payroll and see that 85.1% was for payroll, our $40,000 divided by the $47,000 of qualified expenses. That's greater than the 75% that we have to have, so no reduction needed. Therefore, $47,000 can be forgiven. That's our total qualified expenses. They were all applicable here. And then the $3,000 that's remaining, again, we can either go ahead and repay or wait and pay within the 2-year loan period, or at the end of the 2-year loan period. And then just one more example here where the loan is partially forgiven because we had less than 75% used on payroll or more than 25% used on those other costs. Now there's still some more guidance needed here, but I went ahead with our current assumptions on this calculation. So same here, the PPP loan was $50,000, same coverage period, but now our 4 payroll runs are $35,000, our 2 rent payments are $10,000 in total, and our 2 utility payments were $5,000 in total. We still have the full-time equivalent employees at normal wages, so no reduction for those. Now we're looking at, again, $50,000 of qualified expenses, the 35 plus 10 plus 5, but only 70% was used for payroll, the $35,000 divided by the $50,000 we actually spent. So we're going to assume that the amount forgiven can be whatever makes that payroll figure 75%. So if we calculate that, we can see that $35,000 divided by $46,667 would make payroll 75%. So we're going to assume that $46,667 can be forgiven. It had to be reduced since not at least 75% was used for payroll. And then we'll assume that the remaining $3,333 would be left as a loan that we either repay now or within the 2-year loan period. Now I wanted to go over just real briefly how to record this in QuickBooks. So you'll want to watch this slide if you had the PPP funds deposited into your current bank account, and then the next slide will go over if the funds were put in a new PPP specific bank account. So if you've got them in your current bank account, you would record the loan proceeds deposit as a liability, and I've been using Paycheck Protection Program Loan as the name. Then you would go ahead and track the expenses that go through those qualified expenses, those whether it's the payroll, mortgage interest, rent, or utilities. You can keep them in their usual expense accounts, I believe, or you can create a new expense account for each PPP type. So you could create an account, for example, PPP-utilities, PPP-payroll, etc. It's really up to you. I don't see an issue with doing it either way at this point. And if something did come out where they specifically wanted it tracked one way or the other, it would be very easy to change it at that time. Now, once the loan is forgiven, so we're quite a ways away from that, but once that did happen, you would want to create a journal entry for the forgiveness portion. So you would debit that Paycheck Protection Program loan liability account for whatever the amount was forgiven, and then you would credit a new other income account that you will create, and you could call it Paycheck Protection Program Loan Forgiveness. That should, if you had the loan fully forgiven, reduce that liability account down to 0. And if it was not fully forgiven, then the liability account should equal the part of the loan that is still outstanding, that was not forgiven. Now I'll go over how to record everything in QuickBooks if you had a new bank account opened specifically for the PPP funds to be deposited into. So first, you want to create a new bank account called something like Paycheck Protection Program Bank Account. Then you'll record the loan proceeds deposit as a liability, and you can call that something like Paycheck Protection Program Loan. Next, you have really 3 options for how to treat the qualified expense payments. And I don't necessarily see one as being better than the others. There's some pros and cons to each one. So one option you have is to make all of your qualified expense payments withdraw directly from your new bank account. So that would mean going to your payroll processor and having them withdraw payroll out of the PPP bank account, as well as for utility payments, or if you've got mortgage payments coming out, rent payments. So the potential issue you have here is not all of those payments are going to qualify. So for example, whenever you make a mortgage payment, you've got principal and interest. Only the interest portion is going to be forgiven. So if you have your lender of the mortgage have the payment draw out of your PPP bank account, part of that withdrawal going towards principal is not going to be able to be forgiven. You could also see this come into play whenever you have your payroll withdrawn. Right now it looks like for the forgiveness piece, you will be able to have forgiven your gross payroll that you had paid to employees plus the Missouri unemployment tax. You would not be able to have forgiven the other employer taxes on it. Usually payroll processors are going to withdraw all of that, so you would have part of it again that comes out that really wouldn't be forgiven. So that's one of the main issues I see with option A, but you could still work around that and support the amounts that are withdrawn, and you would probably just have to show, hey, these parts of this are actually not forgivable because of those reasons. Option B would be to continue to pay all of your qualified expenses out of your normal operating bank account, but then once you know those qualified expense amounts, you could make a bank transfer or write yourself a check from the PPP bank account to your operating bank account for each qualified expense. So say your payroll runs and you know that the amount is $10,000 that would be qualified. You could have your PPP bank account transfer $10,000 into your operating bank account. That would create a nice trail of each qualified expense, and it would also have those funds essentially be coming out of the PPP bank account, though not directly. And then option C would just be to continue to pay the qualified expenses out of your normal operating bank account and don't do the transfer out of the PPP bank account. In that case, those loan proceeds would just sit in full in the PPP bank account, and then you could wait until you actually get the loan forgiveness amount. Once you know the loan forgiveness that the bank has accepted, you could at that time transfer that amount from your PPP bank account to your operating bank account. So then going on to expenses, you can track each of those qualified expenses in their usual expense accounts, or go ahead and create new expense accounts for each PPP type. So you could create a PPP-utilities expense, you could create a PPP-payroll expense. I don't see an issue either way, but if it did end up being an issue, it's very easy to change after the fact. So once you have the loan forgiveness amount, you can create a journal entry for that forgiveness portion. And you would simply debit the Paycheck Protection Program loan liability account for the forgiveness amount, and then credit a new other income account that you could call something like Paycheck Protection Program loan forgiveness. After you make this journal entry, you should be able to look at the liability account that you created for the PPP loan and double check that it's correct. If your loan was fully forgiven, it should say 0 on your balance sheet. If it was not fully forgiven, then the loan should be whatever portion was not forgiven. That's what should show up on your balance sheet. And then lastly, kind of mention this, but depending on which method you choose in number 3 above, you may still have funds sitting in your PPP bank account. Once you know the forgiveness portion, you could go ahead and transfer any remaining PPP bank account funds that are still there into the operating bank account. So if it's fully forgiven, your PPP bank account should be at 0, so you could just move everything into the operating bank account. If you want to use it to pay off the remaining loan, if it was only partially forgiven, you could just leave it sitting in the PPP bank account until you decide to pay off the loan. Or you could just keep it in the PPP bank account and continue to use it to pay future qualified expenses if it's been partially forgiven. And then you would just know that down the line, whether you do it in a few months or after the 2-year period, you would still have to pay out the loan. You would probably just have to, at that point, pay it out of your normal operating bank account. Now let's go over what you'll need to prove out the loan forgiveness amount, because we're not just going to take you at your word. Each bank will have different processes and requirements, so you're really going to want to contact whichever lender you receive that PPP loan under to get their specifics on what they're wanting for the forgiveness aspect of this. But in general, we think you'll need some of these items all across the board, so you can go ahead and have them ready. You'll need your payroll reports from your payroll processors for all those payrolls that were processed during the 8-week period. And it should detail out all those different items that can make up payroll, like the gross wages that can include salaries, commissions, tips, etc., as well as your Missouri unemployment that you pay as an employer. If it doesn't show it, you'll need another report that shows the number of full-time equivalent employees as well as their pay rates. That will be part of that potential reduction amount that they need to look at. You'll want to have your invoices or receipts for utilities paid during that 8-week period. You'll want to have the lease agreement ready for your rent that was paid during the 8-week period. That should prove out, again, that you had it before February 15th. Then you'll need mortgage payment receipts or some sort of document that shows the breakout of your payment between principal and interest. Again, only the interest portion can be forgiven, so that's what they're going to be looking at for that. And they will probably want something, if it's not shown on that document, that shows that the obligation was entered into before February 15th. You could also have a listing that summarizes all of those qualified expenses that were paid out in the coverage period. You could run a report or a couple reports out of QuickBooks for this. And you could also track it in an Excel worksheet, kind of as a double check and a place that consolidates everything. And I'll actually show you an example of one I created here in a couple slides. Then you might also need the bank statements that show the check images or canceled checks for all of those outgoing charges that supports that item in number 6, which is that listing bullet point right there above. Now I wanted to go over a couple other things to keep in mind with the PPP loan forgiveness. The first is to look at the timing of your qualified costs that are being paid. Remember that your 8-week coverage period starts on the day that your PPP funds are deposited. So you need to look at what that day is, calculate the 8-week period to see that time frame. Then you'll look at your qualified expenses to see when those usually get paid out. If they're getting paid out just after the time frame of the 8-week coverage period, you may need to alter when you're making those expense payments. So just for a quick example, we go back to the assumption that our loan deposit was deposited in our bank account on April 20th, which made the 8-week coverage period April 20th through June 15th. If our utility bill is set to automatically draft on the 17th of each month, we would only be getting one utility bill paid out during our coverage period. The April 17th one drafted before we had the funds. The May 17th one would be within the 8-week time period, and then June 17th would be after our 8-week coverage period. So if we left it as is, we would only have one utility payment under this forgiveness for qualified expenses. So my recommendation would be to look at the different types of qualified expenses and see if you have any like this, and you could temporarily change the payment date. For this utility bill example, I would probably change it to a few days before the 15th. That way we're not running into anything last minute, like if it accidentally didn't draft or accidentally posted on June 16th, just wouldn't want to take any chances. So maybe I would go ahead and set it to be the 12th. So instead of drafting May 17th, June 17th and missing out on one of those, we could set it to be May 12th and June 12th, or just leave it May 17th and change June to June 12th. That way you pick up May and June's payments. We really feel like the spirit of this is to pick up essentially 2 months worth of each of these qualified expenses. So we don't want you to miss out on any potential loan forgiveness just due to the weird timing of the 8-week coverage period. Now let's take a look at the example Excel worksheet I created for the forgiveness calculation. This can be used for multiple purposes, so I'll try to go through each of those here real quick. First, I put the PPP loan amount of $50,000 in there. That's the actual loan we received, and we know it was deposited on April 20th, so I went ahead and put our 8-week forgiveness period as April 20th to June 15th. Next, I went ahead and estimated the qualified expenses that I would have in that coverage period. So for the payroll, our telephone, our rent and utilities, I inputted what I expect those expenses to be on average. Maybe they've been on average each of the past few months, and that's what I used there. That gave me a total of $43,100. So I can see that right now, based on those estimates, our qualified expenses would be just over $43,000 of our potential forgiveness of the full $50,000 PPP loan. So just using this, you can see that maybe we would want to increase our payroll. For example, if you pay out quarterly bonuses to employees, you might want to make sure that maybe it usually would run on either the last payroll of the quarter or the first payroll of the subsequent quarter. Maybe you go ahead and push that up to the June 15th payroll. That way, even if that payroll number went up to $15,000 instead of the $10,000 estimate it's currently at, that full $5,000 additional would most likely be forgiven under the circumstances that we're presenting right here, at least. I also used it to calculate what I expect the qualified payroll cost to be versus all those other qualified expenses, the telephone, rent, and utilities, because we want to make sure that our payroll is at least 75%. So we are good to go there. You can see that under the current estimates, 92.8% of the $43,100 is going towards payroll, so we're above and beyond the 75%. And then I also used it to kind of track when these expenses are usually going out. So as we mentioned on the previous slide about utility payments, maybe having to adjust those payments, that's where I used this to look, are we going to have any payments that go out just after June 15th that maybe we need to bump up a little bit. And then lastly, I would use this as I actually learned the true amounts paid. So once the April 30th payroll runs, I would change that $10,000 figure to be what actually ran for April 30th. And then same thing with all the other expenses until I knew everything and saw the actual amount that I expect to get forgiven. One other consideration I wanted to go over was the taxability of the loan forgiveness and the deductibility of those qualified expenses. So we know that the loan forgiveness will be excluded from your gross income, so it's not going to be taxed. What we do not know is if the expenses that are used to compute the loan forgiveness are going to be tax deductible, or if they're not going to be tax deductible, if we're going to have to exclude them. Though we're awaiting further guidance, our hope obviously is that they will be tax deductible, but we cannot say for certain one way or the other on that. And another note, even if it is tax deductible for federal income tax purposes, like we are expecting it to be, each state could have their own set of rules for state income tax purposes where it ends up not being tax deductible for state income tax purposes. So again, just waiting on further guidance from both the federal government and the states on the deductibility of those qualified expenses that we used in our loan forgiveness. So just some final thoughts and summarizing here. You want to make sure that you use your loan proceeds only on qualified expenses. You could get in trouble if you use them for other things. So just use them for those qualified expenses we went over: payroll, mortgage interest, utilities, and rent. Understand that the loan forgiveness could be reduced based on those factors that we went over earlier: the full-time equivalent employees, the reduction in employee wages, or if you use too much on non-payroll items. Keep documentation and track everything. This is so important. You want to over document if you can. You just keep everything. You'd rather have more than enough information than be scrambling to try to prove the forgiveness amount. And then contact your specific PPP lender to see what specific additional guidance they may have created. Now, they might not have this at this point, but they should probably be coming out with it in the next, I would say, few weeks, or hopefully by the end of the 8-week period here, so that we can know exactly what you're going to need to be able to prove your loan forgiveness amount. And that's all I have for you today. I appreciate you watching this video. If you have any further questions, just let us know. Thanks.